Hey guys, what's up? Welcome to our YouTube channel Trader's Journey. After uploading last video, I thought I'm gonna do live trading and upload the live trading video each and every day. Then I thought doing that every day at some point of time, that's going to be monotonous and very boring. So I decided, after all, I'm showing my trading log, I'm sharing my trading log, so why don't I do it once in a week, so that I can show you the entire progress of my week, whether I made profit or I made loss, and the activity that I did for the whole week. At the end of the week, I'm gonna show my trading log, whether I'm in profit or I'm in loss. So that is one. Second, just sharing the trading log and showing what I'm doing, I think is not enough. So what I decided, every Saturday when I share my trading log, I'm gonna discuss one concept on each video on every Saturday. So by doing that, I think I can be of little help and I can add some value to your trading journey. So before I discuss about a concept today, I want to talk a little about myself. I am not a full-time trader. I'm a part-time trader, and I said I'm starting on. When I said I'm just starting, it doesn't mean that I'm doing it from 3-4 days, but I'm observing market from last 1 year. In between, I traded with real money, and I lost quite some amount of money, and whatever amount of money I have lost, it's not because my strategy was wrong or it's because I couldn't understand the market. It's nothing like that. The only thing which made me lose my money, and the only concept that is of utmost importance in a trading career, and the concept that I'm going to discuss today, and the concept is of risk and risk management. If you master this, if you maintain this while you trade, you will be successful trader no matter what. No matter the market condition, you are going to be a successful trader. So let's dive in to today's concept. As I said, today's concept will be risk and risk management. Now, what is risk? Risk is actually a broad concept, and it is subjective also, and most important, it depends on perspective. Risk for one person could be completely different than the risk to other person. Now look at this. Risk, the subject of risk, the concept of risk is so broad that it actually is an entire subject, but we are not concerned about the entire the universe of risk, all types of risk, but we are just concerned about the risk in trading. So I find this nice definition in Wikipedia, which says risk is the potential for uncontrolled loss of something of value. Now, something of value means it can be anything. Depending on the people, it can be health. For some, it can be health. For some, it can be social status. For some, it can be wealth. Anything, depending on the perspective. Now, since we are concerned about trading, and this channel is all about trading, so we're gonna focus on risk in terms of trading. And when I talk about trading, The only risk that we face in trading is losing of our capital. And this particular point is the bone of contention, the point of discussion between which one is better, the long-term investment or the day trading. And all the advocates of long-term investment always point this very thing, that don't day trade, don't use leverage, don't do this, don't do that, you're gonna lose your capital, you will do this, you will do that, and all sorts of things. But what if a guy is disciplined? What if he maintains risk? Now, for example, here in this picture, as you can see, there are 4 houses in a lane. Now one of the house is in fire. So in order to reduce risk, what will be our very first step? We will immediately sever the connection between the houses so that the connecting houses don't catch fire. What is this? This is called risk management. So when that's the same concept, when we bring it to trading, we call it risk management. Now what is risk management? Risk management is controlling your uncontrolled loss. Now in this slide, as you can see, when we trade, we put into a position. Suppose we go for a long position, we take a position, we ride the bullish move. There will be a point when the market will start reversing. So what we do is we're gonna put a stop loss order, where in case if the market goes against us, that stop order will limit our loss to a particular amount. Okay, now this is a little about risk management. Now in my case, as I have already shared in my last video, that my risk is 2% to 3% of my capital. As my capital is 5,000 rupees, so the maximum loss I'm going to face is 100 or 150. So now I know. So before the market opens, I know, I am very clear that today, in case market goes against me, the maximum amount that I'm going to give to the market is 150. So I am absolutely in control of my game. I know what is the amount that I'm going to lose. So there's no point panicking. I'm ready to lose that amount in case if the market goes against me. Now how does it work? Let's see an example. Suppose there is a stock whose price is 500 rupees. Now after doing my technical analysis and all sorts of things, I decided that my stop loss will be 5 rupees. So what is the maximum amount, what is the maximum number of stock that I'm gonna buy? What I will do is, my maximum risk for the day is 150 rupees. So what I do is I divide 150 rupees with my stop loss, that is 5 rupees, and the number of stocks I'm gonna buy is 30. So that means my stop loss will be at 495 rupees. That is, if the market goes against me, and if from 500 rupees, if it comes down to 495, I'm out of the market. My maximum loss 150 rupees. And since my risk to reward, as I said, is 1:3, so for every 5 rupees loss, I'm taking a target of 15 rupees. So my target will be 15 points, that is 515 rupees. So this is how the calculation goes. In any case, since I have already pre-set mind that I'm not going to lose more than 150 rupees, so in any case I am not going to break this rule. I am maintaining this, since breaking this rule in the past has cost me a lot, so I'm not going to break this. This is one of the most important concepts that a new trader has to keep in mind. It doesn't matter what trading technique you use. It doesn't matter who is your mentor. It doesn't matter how many books you studied. The maximum, the accuracy that you're going to get from whatever technical analysis, whatever technique, strategy, indicators you use, you're gonna get 60% to 70% maximum accuracy. If you get 70% accuracy, that is fab, because there is hardly any trader in this world who gets 70% accuracy. Most of the time traders get 40 to 50% accuracy. And if your risk to reward ratio is something like this, then even 40% accuracy will give you a huge profit. So maintain your discipline, stick to risk management, whatever with the market condition. Stick to your risk and risk management. Stick to your discipline. Now, there are many concepts when I talk about discipline. Okay, the most important, what I felt, was not the market condition, not the strategies, not the setups, not the chart pattern, not the price action, nothing. The most important thing that hampers trade of any sorts of traders, be it professional, be it amateur, is fear and greed. These two emotions will ruin your trading if you don't control it. But if you can control these two emotions, then you are a damn good trader. But since this video will be very long, if I start discussing about those, I'm gonna discuss those in next video. Okay, one more thing I wanna just mention here is that most of the long-term investor talk about investing in the stock market for long term. What they mean is, they say you put your money in stock market and keep that money for at least 5 years or 10 years or even longer than that. So they focus on long term, which means they are focusing on the time. Okay, they are backing on time. Now, in terms of trading, I don't know whether the investors, long-term investors, or the traders ever have thought about this or consider trading from this point of view, but in trading, the law of average applies. Now, what is law of average? I'm going to discuss law of average in next video. This is a very important concept, very interesting concept rather, I say. Like long-term investors depend on time, the law of average depends on time and the number of trades. I'm going to discuss this later. Why law of average is important for trader, I will discuss in some other videos. So now I just wanted to touch upon risk and risk management. That's what I wanted to do this week, so this is what I did. Now, apart from this, I want to share my trading for this week. So let's go to my trading log. So this is my trading log, as I have shared last week also. So this week started on 16th of September till 13th of September, 4 days trade I had done last week, in which my capital was around 5,195. I was around 3.5% up. Okay, this week I started my trading on 16th and did till 28th. This week 1 2 3 4 5 6 7 8 trades I took this week, and at the end of the week my capital is 5,709 rupees 0.08. That means I'm up around 13.5%, which is obviously a good growth. These days bank give you around, in savings account some banks give you 7% return, in FDs senior citizens get 8% return, but here it is, in like 2 weeks I'm getting 13.5% of return in 2 weeks. And if you can notice here, if you can calculate this, my risk to reward ratio is 1:3. That is, if I am losing 1 rupees, then I'm if the trade goes against me, I lose 1 rupees, but if it goes in my favor, I'm gaining 3 rupees. So that's a very good risk to reward ratio, and if you calculate my accuracy, it is somewhere 57%. As I said, usually traders, the accuracy varies between 40 to 60%. So mine is at this point of time 57%. So this is my trading log for the last week. Apart from this, I just wanted to share one of the trade that I have taken last week, and that is coal pal, which I took on 16th September 2019. I entered at around 9:24 a.m. My entry price was 1287 rupees. It was a long position. I exited at 1311. So look at these guys, look at these. The point I took, 24 points. 24 points is a huge number. See, 12 rupees is 1%. I took 2%, 24 points. 10 I bought 10 shares, so 240 is my profit after brokerage. I got 232 in net profit, which is 4.77% of my capital. Now I'll take you to the chart. So this is the chart. This is the chart of coal pal. As you can see, the symbol here. This is the chart, and this is the candle for 16th September. You see here, the stock was an uptrend. It was making higher highs and it was making higher lows. So definitely this stock was in uptrend. As you can see, it went up, it came down, but it didn't break its previous low. It again went up, it broke its previous high, it again retraced, but it didn't come down below its previous low. Again it went up. So this was the pattern here. So before I took the trade, I observed that it has made some kind of bullish pattern here, See the daily candle, 1 2 3 4 5 6 7 8 9 10, around 10 candle. It was within this range of 10 candles. So it had made some kind of bullish flag pattern. Here you can see it made a bullish flag pattern. The moment it broke this pattern, I took an entry. I saw it that it broke this pattern. It broke 10 days range. It broke this bullish pattern. Then I took an entry and I ride. So at the end of the day, I got 24 points. As I said, I am not a full-time trader, so controlling my greed, I took 24 points and exited the market. So that was a good move. This was somewhat a price action. This is called price action trading. I'm going to talk about all these in our subsequent videos. So today the video has been too long, so let's end this video for today, and we'll continue our discussion with a new concept and for a whole week's trading log on next Saturday. See you guys. Good night. Hasta la vista.